Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're privileged to have this industry insider with us again for a second time. We interviewed Vince Sorace, the CEO and president of Kutcho Copper, a couple years ago on Reluctant Preppers, and we have him back now to give us an update on progress that they're making in the copper mining sector. Vince, thanks for joining us here on Reluctant Preppers.
Well, thanks for having me.
And today's date, for those who are keeping track, today's date is Thursday, March 7th, 2019. Vince, if you could talk to us first about some macroeconomic conditions within which the copper industry and all mining industries find themselves right now. We've been, after seeing what was called the worst December in record for equities and then the best January on record for equities, markets seem to be pretty toppy recently, and we've had 4 days in a row downtime of markets in most of the major markets. Some pundits are saying that it's trade wars and other concerns about faltering economies and strength of the consumer confidence, a lot of store closures, that kind of thing, that are causing a lot of extraordinary measures like low interest rates, etc., actions. But can you talk to us about how all these macro factors specifically affect the drivers of the mining industry, and particularly the copper mining industry, and demand are related to that?
Sure. There's lots of interesting stuff going on in the world today, politically, economically, recently they definitely have an impact on the resource space. The precious metals are a little more of a complicated market. There are so many variables that play into the precious metals market. And a big factor being the U.S. dollar, and the U.S. dollar is kind of being bounced around given a bunch of the political events occurring. On the copper space, there are a few drivers there, and I guess the base metal side, the copper side, is a little more tied into, or a little more clear cut with respect to fundamentals, and. Sure. So, that will play out with rhetoric that we're hearing on the trade war, with respect to, maybe the trade wars, if this goes on for a long time, maybe the trade war's potential impact on economies, et cetera, because, copper is typically tied into the health of economies. But I think that is a lot of rhetoric right now. I do think they're going to come to a resolution with respect to the trade war, the U.S. and China trade war here, primarily soon. I think they need to, and I think you might see the opportunity for a quick and maybe a small but a quick price movement in copper. But I don't think that's what's happening. The driver in the copper space is driven more by fundamentals here right now. I don't think there's any dire or immediate concerns about economic slowdowns that will impact the copper space per se, right now. So, what we need to look at is, and people need to understand is, what is copper used for, and what is the impact? Copper is all around us, and copper is used for everything we see and use in daily life, from infrastructure, power grids, all the wires in the sky, electronics, appliances, construction, transportation, renewable energy, solar, wind, all the infrastructure around that. All of that requires copper. And all of this is driven by the fundamental of population growth. So, the population of the planet is increasing exponentially. And if you take copper back 100 years, we've seen over a 2,500% increase in copper usage, through population growth and the requirements and the necessities of people and everything around them and everything they use every day. It's forecast to, from here, increase another 43% over the next 10 to 15 years. So, copper is something we need. Copper is something we use every day. It's got a fundamental purpose, if you will. So we're going to always see that demand side of copper grow. Now you can throw in a little added fuel to the fire, if you will, with respect to what's happening now with electric vehicles. Mm-hmm. So an electric vehicle can use up to 4 times the amount of copper that a standard car would use. And if you add that up with what's happening in the industry, I'm sure everybody's seen the movement right now is with most car manufacturers, they're either going 100% electric or a good portion of their fleets are going electric.
Right.
And that impact, if you look at it over the next 5 to 10 years, even if I've seen a variety of different figures, if it's a 3, 4, or 5% or 2% increase in the copper demand side, that's actually very significant. It's very significant in with respect to current output and what that will do on the demand side. So copper, and another thing is we hear there's a big movement on this planet to go green, the green revolution. Well, copper helps facilitate that. So, copper is sustainable. It's 100% recyclable, but it's used in all these renewables. It's used in solar. It's used in wind generation, and that's going to continue to grow as well. So there's lots of interesting variables from the demand side to call it your benchmark demand that's just kind of continue to increase, as well as these additional factors. So, that's what makes copper interesting. You couple that with, and for what's happening right now, the dilemma that the copper space is finding itself in right now is you've got this benchmark and this additional demand happening. For the first time in a long time, what we're going to be experiencing is a problem on the supply side. So you've got forecasts starting as early as this year. Some forecasted and pretty significant deficits amounting to in the coming, call it 5 years plus, and that becomes a big issue. And typically when people know when you have a demand side and supply side imbalance, what's going to happen? You're going to get price increases.
Right.
And on the supply side, there's multiple forces at work. You've got a small number of maybe 20 of the biggest copper mines in the world supply most of the global copper. Okay. And those mines are big. These are like multi-billion-dollar builds. These are mines that take 20 years to get put into production, and those aren't being replaced. They haven't been found, and they're not being readily replaced to meet this demand. The other thing that you're seeing happen over the last decade or 15 years is a lot of these mines that are currently in production started out at much higher grade. So there are these pretty incredible declining grade curves right now, where they used to be mining, say, 1.5% copper, and now they're mining 0.5% copper. At the same time, costs are going through the roof across our industry. And so that just makes it really hard to mine what's even left at this lower grade. And so something has to break. And, the only thing that can break really to bring additional copper deposits online, even some of the smaller ones, the marginal ones, are for copper's price to increase. So it's an interesting dilemma that we're facing right now and in the copper markets. And I think it'll be hard to find anyone out there in this space, strategics, analysts, et cetera, that aren't kind of on the same page right now forecasting this kind of supply side deficit coming.
It was interesting when you were describing what I guess we could call about a compounding growth. You mentioned sort of the exponential population growth curve, but layered on top of that with the increased electrification of our economy, is this sort of like copper required per capita also growing increasingly on top of that rising population curve.
Of course.
If we could focus in on maybe one of the most populous countries, China, and also one that is radically transforming their economy. They've got some major initiatives there, government-led initiatives to really transform their economy, and a big emphasis at the same time on cleaning up their environment, because there's been a lot of concern about severe environmental degradation due to pollution from older forms of energy, that sort of thing. So as they look towards more electrification going forward and electric vehicles, that sort of thing, do you see that as a major driver of a specific area that's going to drive copper demand going forward? And what about, do they see copper as a strategic material for their growth plans?
China is been buying copper, and they'll continue to buy copper because, yes, you hit it on the head. Right now, China consumes about 50% of the of copper produced globally. China's obviously gone through this massive growth phase, infrastructure. Everything that I'm seeing right now is, they're continuing with that infrastructure growth. They are, as you suggested, they are now moving into the EV market quite fast and heavy. They do have issues with respect to kind of cleaning up the environment. And so if they move to the course of, say renewable generation, other forms of generation, other additional electrification through the country, that is all copper demand. So, and just recently copper was hovering around 265 a pound for quite a long time, 270 for quite a long time. It just moved up to 295. And that was kind of a bit of a recent phenomena where the stockpiles in the warehouses, literally about a week or two ago, were kind of suddenly seemed to be depleted, and a result of that is the demand coming out of China. So, there's lots of talk out there about the Chinese economy slowing to maybe 6 to 6.5%. But listen, that is still a big number.
That's very robust.
Still a lot of consumption that is going to keep driving the copper market.
You also mentioned the price action and how that's dependent on other currencies like the euro or the U.S. dollar. Specifically, the U.S. dollar is the world reserve currency. We had President Trump appearing on the CPAC conference a few days ago, talking about how he wants not a devalued U.S. dollar but a more competitive one, which does mean some loss of buying power of the U.S. dollar to make it more attractive for making more goods affordable for other countries. Most people in the U.S. are not aware that although gold, they would say, has been down quite a bit in U.S. dollar terms from a previous high back like in 2011, gold is trading at or near all-time highs in 70 other global currencies, just not in the U.S. dollar because of the relative strength of the U.S. dollar. So how is that affecting copper? If you look at, you talked to us a little bit a few minutes ago about the current price of copper moving up in terms of U.S. dollars. How is copper's price in terms of other global currencies?
In Canada, here where our project resides, it's fantastic. I think a lot of other Canadians might not like the fact that our dollar is so devalued compared to the U.S. dollar at this point, and it makes travel expensive. But as far as being the CEO of a copper company, it's fantastic. Because that delta here is fantastic for us. I'm spending money in Canadian dollars on my project, and I'm getting my returns in a U.S. denominated commodity. So I like this. I like that delta in there.
It works well for Cucho Copper, being a Canadian company. So the company you head as president and CEO is Cucho Copper, Canadian small cap development / exploration copper focused business. And your share price has nearly doubled since late December. So in approximately the last quarter, there's definitely an uptrend in the last quarter. What's driving this bid for Cucho?
2018 was just a really bad year across the resource space. I mean, period. As you mentioned, I think we started having a better 2019. Especially the Canadian resource space in the last couple of years. There's been a bit of an interesting phenomena occurring. The resource space is risk capital, and Canada has, I guess, unfortunate for us, led the way with the cannabis trade, was a big part of the crypto trade as well. And so we saw a lot of that risk capital moving to those industries and kind of left resource as a bit of an orphan. And so I think what we're also starting, because you can compare that to other markets, like to say Australia's got a thriving resource trade or exchange and market down there as well.
Okay.
And on average, they're probably sitting at 30 to 40% higher valuations across the board than we are here. They didn't have that competition for capital, if you will. So Given that, and over the previous years, from 2000, we've been in a bear market for a while in the commodity space, so that kind of adds to it as well. But I'm starting to get the sense in the field right now that here, at least for us in Canada and the Canadian listed companies, that the cannabis trade's starting to be somewhat saturated, and the easy money has been kind of taken off the table. And I know for a fact that some of the old kind of resource guys are starting to turn their heads back to our industry. And they're taking a hard look because stuff's cheap. When you look at some of the multiples across the board here, and especially say something like Cucho Copper, where we're trading at 0.1 price to NAV multiples for an advanced stage project like Cucho that's has been de-risked. We're approaching our feasibility study. Those are ridiculously cheap multiples. Companies like us and where we are right now in our life cycle could be and should be trading at anywhere from a 0.3 to a 0.6 P to NAV. That's 3 to 6 times higher than we are trading right now. And so, there's been a big disconnect. But I'm cautiously optimistic that maybe we'll start seeing things kind of turn around this year with respect to the industry as a whole. But I'm very optimistic with respect to copper itself. Like I said, the fundamentals are there. The fundamentals are right for copper itself to outperform metals, outperform the commodities side, and with that, it will pull up a lot of the guys in the copper space like us.
You mentioned in passing there your project, and could you please explain to us what Cucho does exactly with regards to your flagship project?
Sure. I mean, we've been talking a lot about copper, so that's what Cucho is, and Cucho's got it. We are a small, high margin, high grade copper deposit located in a very safe jurisdiction in British Columbia in Canada. And when I say high grade, I referenced earlier a lot of these guys mining like 0.4% copper, 0.5% copper. Well, we've got 2.65% copper equivalent at Cucho. So that's a significant difference. And high grade in anything, gold, silver, copper, is where you want to be. That makes for the robustness and a good returns on any assets and any project. So, we put out our pre-feasibility study last year, and we yielded some good economics. We have a $265 million after-tax NPV and almost a 28% IRR, and that's very robust across any environment, but especially in the base metal space. And the interesting thing too is that when I talked about these very, very big copper projects, these multi-billion-dollar builds, those are the projects that supply the world. But they're also very expensive and they take a long time to get online. Our project is going to cost probably sub $300 million by the time we're finished our feasibility study. I'd guess somewhere less than $300 million to build. So these are in flavor right now. These smaller capital projects that can be financed quite easily. These are the ones that are kind of moving forward very, very quickly. And that's what we have. So we have like this very financeable project in the right space, I think in the right time for what's coming in the few years. And and hopefully our objective is in the next 3 to 4 years we're going to be a mine in production and producing copper.
If we could get an update from you on your relationship with Wheaton Precious Metals. You spoke to us briefly about that the last time we talked, and again, they are a large, well-known, top-tier mining company that does a lot of research and due diligence into other companies and only invests in a rare few of them. What was their findings by looking into Cucho, and what kind of relationship are they taking with you?
Wheaton's a fantastic company. They they're on the streaming end of things, so let's call them more on the strategic end of the market as far as financiers. But what Wheaton focuses on, and companies like Wheaton are, they want that, call it streaming or that royalty side of things. But what's happened in the last number of years, where capital's been harder to find, it's been companies like Wheaton that have been providing some of the capital required to move these projects forward. And so when we identified this asset, and which was only a year and a half ago now, and we bought it from Capstone, and we paid almost $29 million Canadian for the asset, You've got to get creative in how you finance these acquisitions these days. So we brought this to Wheaton, and it was a three-part deal. It was they basically did a $20 million debt facility with us to help us acquire the asset. That's the first time Wheaton's ever done anything like that with any junior developer. They did $4 million in equity into a financing we did. And then we put this stream on the precious metal components, which is only 8% of the revenue of the project, so it doesn't impact the primary commodities of the project. And that was valued at $65 million US. So we did this kind of combination of financing through the project that made complete sense. And Wheaton's a big, prominent, very successable company. They've got an exceptionally strong technical team. So, it is a good, how do you say, they vetted this project, which is a good testament to the value of the asset, the project itself, and the team we put together to move this through to production, because that's what they care about. They want this in production, and they believe this is a project that will get put into production.
So what is your timeline for 2019? What specific steps are you looking for to accomplish this year?
2019, we're still evaluating what we may do in the field this year, but the primary motivation and the strategy for this company has always been, from the day we acquired it, was to basically the shortest path to completing our feasibility study and permitting, and to get this into production. We identified the fact that this project was very scalable, so there was lots of room for this thing to grow and to get bigger. And we actually put out a press release about 3 days ago with our new resource estimate that now puts this project within the top 5 size VMS copper deposits in Canada. So we've demonstrated that there's scalability here. There's still more room for this thing to grow, so it can get bigger. But so we spent last year in the field, and the entire field season last year was meant to collect the balance of the technical data to feed into the feasibility study, and also re-engage in our baseline studies that also feeds into the permitting process. We spent about $15 million last year, and so as of today, we've been collecting that data now, and basically getting it ready, and we're about to kick off the development of our feasibility study, which is due in about 6 months from now. So that feasibility study is a very, very important part of any resource company's life cycle. It is that point where you should be able to feel confident that this project is de-risked. You should be able to feel confident on the economics of the project, that it's buildable, that it's financeable. So this is what we're going to be spending our time on right now.
Turning our attention back to the copper mining sector, in your view, what factors could ignite renewed interest in and performance of the copper mining sector and the copper market?
We do need a bit of a sentiment shift. I think we've been in a bit of a bear market on the resource side for a while. There's been some signs of life. We saw kind of gold come back to life here in the last couple of months. I think that with respect to copper itself, I do believe with the resolution to the U.S.-China trade war, I think that could be a small and short-term catalyst. But I still do believe that the fundamentals, and I think we saw this ignited in the last couple of weeks with respect to what happened with the copper stocks in the warehouses, that it's going to be those fundamentals that are going to start driving a long-term upward trend in the copper prices. If you get all of that coupled with an investor sentiment shift in the resource side, I think we're long overdue, because I think we're way too cheap. Mm-hmm. I think those will be the catalysts moving forward for our industry.
So a fundamental supply-demand gap and value play in what's been a neglected sector for too long. Okay.
Yes.
If people want to find out more about your website and ticker symbol, where can they find that?
You can find us, and there's a lot of great information there, more on the copper space and the electrification going on out there with EVs, et cetera, et cetera. So you can find all that at www.Cucho, that's Kutcho.ca. We trade on the TSX Venture Exchange under the ticker symbol KC, and we trade on the Pinks under the ticker symbol KCCFF.
Well, Vince, it's been a pleasure again getting you to visit us here and give us an update. We've been speaking with Vince Sorace. He's the president and CEO of Kutcho Copper. Vince, thanks always for joining us here on Reluctant Preppers.
Thank you for having me.